U.S. banking system is sound and resilient. Welcome to Looking at the Markets. What do you think about that statement? Do you agree that the U.S. banking system is sound and resilient? You can put your comments below this video in the comments section if you'd like. Well, that's how Federal Reserve Chairman Jerome Powell feels about it, or at least that's what he's saying. I don't imagine he would say something to cause panic in the markets, so maybe it shouldn't be so surprising that he said that. But what do you think? What's your opinion? Well, let's take a look at some of the evidence. You have three bank failures so far this year. The year's not even halfway over. First it was Signature Bank that failed, and then Silicon Valley Bank. And then Warren Buffett said something to the effect of the bank failures are not finished yet. And it turned out he was right, because after that, just recently, First Republic Bank failed. And if you don't think it's a failure, consider what the shareholders of First Republic Bank are going through now. How much wealth have they lost? How much value in their shares have they lost? It's pretty horrendous. And then after hours, you've got other regional bank stocks just plunging. It's pretty rough. Look at WAL stock, Western Alliance, down 30% after hours after already a rough day. And then PACW is another one, PacWest Bancorp. And this one, after a red day, after hours, down 58%. Pretty brutal. And rough on anybody who decided, well, I'm just going to buy the dip, right? Because this was an $11 stock in late April, not that long ago. Then when it went down to $9, some people might have decided to buy the dip because dip buying seems to have worked for a long time. Then it went down to $6 and change, and then in after hours trading, $2 and change. And I'm not touching this. I mean, you have to decide what you want to do. Do your own due diligence. Make your own decisions always. But there's an interesting lesson here. I mean, you look at WAL, Western Alliance Bank stock, and you can get trapped in maybe if you just look at the PE ratio. 3.37 looks enticing, looks attractive. Dividend yield of almost 5%, again, very enticing. But you have to look at the company itself. Is it sound? Is it on solid ground? Fundamentally, financially, that kind of thing. So you want to keep up with the news, know what's going on, know what you own, or don't own it. If it's not meeting all of your criteria, if it's not checking all the right boxes for you, if you're not comfortable with it. And don't just buy something because it has a nice dividend and a low PE ratio. Those are factors to consider, but not the only ones, certainly. And I believe that the market might be misreading what's going on, and maybe the market is just being stubborn. This is according to Lisa Abramowicz. The market is saying the Fed just raised rates for the last time in this rate hiking cycle. And the next move will be a rate cut and could come as soon as September. So I think a lot of the stock market's rise in 2023 so far is based on that belief that the Federal Reserve is now ready to finish raising the federal funds rate and is going to start cutting, not even just stopping or pausing interest rate hikes, but actually start lowering interest rates, cutting rates, even as soon as September. So the market is, if this is true, then the market is wagering that the Federal Reserve is going to start cutting interest rates this year, and not that far away, September possibly, they're thinking. I wouldn't bet on that. I'm not saying it's not going to happen. I'm saying I wouldn't bet on it. I wouldn't wager money on that. Because, and it's up to you whether you want to believe what the Federal Reserve says or not, but Jerome Powell literally just said we on the committee have a view that inflation is going to come down not so quickly. It will take some time, and in that world, if that forecast is broadly right, it would not be appropriate to cut rates, and we won't cut rates. I mean, that's pretty clear. The market, I guess, is saying we don't believe you. You're going to cut rates this year anyway. But why bet on that? That seems like fighting the Fed, and the old saying, don't fight the Fed, might have a lot of truth to it right now. So this is not necessary. This doesn't necessarily mean you have to panic sell all your stocks or anything like that. But if you decide you don't want to add to your stock positions for large caps, mega caps, that kind of thing, that's fine. You do what you need to do. And I expect to see more consolidation in the banking sector in the U.S. You've got J.P. Morgan Chase agreeing to acquire First Republic Bank, for example. It wouldn't surprise me if you have more of that in the future, kind of a big fish eating little fish kind of thing in the banking sector. And that could benefit large, the mega banks. So if some of those mega bank stocks go down, there could be an opportunity there. It's something I'm watching. So you don't have to believe what the Fed says, but I don't know if you want to fight them on this issue necessarily. You got to pick your battles, as the old saying goes. So be cautious out there. I think there are opportunities. I try to find them, and I try to bring them to you. So thanks a lot for watching and listening. I will talk to you again soon.